Alright, traders, a very good evening to you all. This is Avril from the Tradepsyche, and I welcome you all to the post-market analysis, outlook, and expectations from the market for tomorrow. Alright, in this video, we'll discuss about the markets tomorrow, what happened today, and the gap up which has happened today. And if you can see on the screen, the VIX has declined by more than 20%. Right, so we'll discuss in detail that what were the things which happened, that why this much gap up has happened, and what we can expect in the coming week, and what discussions we had in the last analysis video. At the end of this video, we'll also analyze that what is the change in Y data. The markets are still moving, right, because it's almost I think only 7 minutes are left. By the time markets will close, I think we'll be ending this video, right? So we'll discuss that after gap up, why there was no movement, and whether this was something which we discussed today in the morning in our Telegram group. And there are some price actions which I want to make you see that where are we on the longer time frames. All right, so let's start with the discussion. But before that, I'll be mentioning about my Telegram group. I'll be leaving the link to my Telegram group in the description box below. If you are a trader, and if you are a new trader who wants guidance, who wants that I want to know that what to trade, when to trade, and how to trade, you should definitely see that group. You should definitely check that group out, right? If you are intraday, swing, personal, whatever kind of trader you are, we discuss each and everything regarding trading in that group. So we'll just go over what discussions we had, right, in our Telegram group. And I think post that we'll go to the charts and we'll discuss. All right, so now first of all, see, if you see today, we opened, I think, roughly 800 points gap up. We closed roughly somewhere around here 23 150 135, and we roughly opened, if you see, we roughly opened around 20. Let me just make my phone silent. Yeah, we roughly opened around 23 900, right? So roughly it is a 750 800 point gap up. So what happened, why this gap up happened, is because I think I think yesterday, the deadline for this ceasefire, that Trump gave a 48-hour deadline to Iran, that if you do not bring a deal by then, if you do not accept our deal by then we will obliterate everything in your country. We will, and he literally gave the warning that a whole uh, you know community will die, right? So that is something, it's not normal. And yesterday night, when the deadline got over, I think it was roughly 3 o'clock or 4 o'clock in India, the deal was signed. The ceasefire has happened for, I think, 2 weeks. And by these 2 weeks, by the meantime, US and Iran, mediated by Pakistan. And the funniest thing is, Pakistan, who is a harbor, who is the capital of terrorism, it is mediating the ceasefire deal, right? So that ceasefire deal got struck between US and Iran, and the global market sheared up. The oil fell by 15%. Natural gas fell by, I think, 5 to 6%. Bond yields went down, right? So there was a relaxation in each and every asset, investable asset, right? So from that perspective, I think it is good. But the main question is whether this positivity will maintain or not. As of now, today, the VIX has declined. The India VIX has declined by 20%, and we are below 20. So yes, the normalcy is coming back to the system, that we can agree upon. But we all know that how much volatile the global markets are. Not even the market, but the Gulf situation is. Because if tomorrow someone, either US or Iran, they break the ceasefire, the markets will again go into panic mode. So we cannot rely on, unless and until this peace continues for I think months, 2 months or 3 months, we cannot be so sure that the ceasefire deal will be maintained. That's all, and that's the only reason today we have gapped up almost 800 900 points, right? Let's go to the Telegram group and discuss that. What discussions. Okay, one, I think today's discussion we'll see, but April 6th discussion, right? We mentioned that Nifty is forming this pole and flag pattern, and this pole and flag pattern, its target is roughly coming at 23,500. And if I'm giving a target, my general anticipation is it will come intraday in the market, but who knew that this will come in the overnight gap up itself, right? So we also mentioned in day before yesterday's this one analysis video that yes, short covering is possible, and this is not the time to go short. I'll take you to one of my X posts also. This was posted on roughly March 24, right? On March 24, if you want to go on daily time frame and see what is March 24, March 24 is roughly this one. This was posted at this point of time, and even below that even after that we went till 22,200, but that was a legit trap, right? So the markets trapped the bears here, and you have to understand this from price action perspective, that we have been continuously falling from 3 to 4 weeks, and from past 4 sessions we have almost risen almost 2,000 points in Nifty. So that is not a small thing. It is like 8 to 9% of move from the bottom, right? So this we discussed that yes, and we also discussed that a pullback can come because one, we were very near to the weekly 200 EMA. Only I think if you technically see from 22 140 to 22 21 800, only 400 points move was left. So technically we were at support and we took the support. And from price action perspective, understand this one thing: if we have been falling from 4 to 5 weeks and we are at a very major support, the markets will see a bounce off, whether it will be news based or whether it will be rally based or expiry based, whatever it will be, right? Getting my point? If you see last time, roughly around 2016, we were falling for almost from 2015 to 2016, and roughly around 2016, early 2016, we made a bottom and we bottomed out from 200 weekly average, and that was a rally which went on for next 3 to 5 months. So that's how important weekly 200 EMA is, and that's why markets took a support. Getting my point? Of course, this is an event based rally, and generally we'll discuss on smaller time frame that what happens with event based rally. But yes, this is the situation, and it is what has happened today, right? And we discuss this, right? So let's go on to today's discussion. We'll discuss the levels very quickly, but let's go on to today's discussion, right? What discussion we had today in our Telegram group, right? So today when the markets opened, and I think yesterday I did not make the video, but yesterday we went long on Nifty, right? If you see, we gave a view, we went long, and we were also long in one of our stocks, right? So today morning I posted roughly around, it happened around 6 o'clock, I think 5 o'clock, 6 o'clock, I posted that yes, the ceasefire has happened, and the GIFT Nifty was up 800 points, right? Then we mentioned a critical point. What we mentioned is we can expect a volatile markets bound by range. I was personally expecting volatile markets because FIs and pros both were against each other, but we were definitely bound by range. We did not see volatile markets, but we were definitely bound by range, right? Then we posted the plan. We are opening a gap up at 23,855. We are carrying longs. We will book that first. Secondly, big gap ups have a habit of retracing back to the support. So near term support is 23,500. So we will wait for the markets to come this near level to plan any fresh longs. Then we mentioned that already we are long. We will book. We booked our longs, and almost in this much gap up we were lucky enough to carry longs, and our whole April month's target was completed in one day in this huge gap up. Nifty first star, the high is 23,961 and we have not gone for gap covering as of now. Any move above morning high and sustaining basis we can see 24,000, and we saw actually 24,000, right? Then we mentioned some of this one. Then we mentioned around 12:30 that generally big gap ups are followed by sideways price action. From morning we are stuck in a tight range. Any move over 24,000 we can expect good short covering, but it didn't come. So there was nothing much to discuss today on intraday basis. Even if you see today's price action, this is what it is. The markets have closed. We are 3 minutes past the market's close, and this is what the price action is for today, right? So that's what happens in generally big gap ups and gap down. Market very rarely moves on intraday basis, because if it's a 800-700 point gap up, bears will not get that confidence in shorting the market unless we break down again below any particular level, and bulls cannot go long because already the markets are 800 points up, so already the premiums will be very costly. So that's why after a big gap up, it is not wise to straight away enter into calls into FOMO. No, it is not wise. If the markets would have shown, okay, this we'll discuss right now. Let's start the discussion for tomorrow, and I'll probably go to the weekly analysis, and I'll show you a very interesting chart now. If you guys remember the weekly analysis video for Nifty mid cap 150, don't you guys remember that we mentioned that these are weak bearish candlesticks? 1, 2, 3. Do you guys remember that these are not good bearish candlestick? If these would have been fully bodied red candlestick, I would have not told you to, I have not told you that these are weak bearish candlestick, but these are weak bearish candlestick, means it has a high probability to get reverse on the upside, and this is what exactly happened in Nifty 50. If you see past 3 candlestick 1, 2, 3, and even at this candlestick, even in this weekly analysis video, I mentioned that yes, some buying has happened, and we can see a good move above 23,000, but nobody knew that we will see this whole thing in a 800-900 point gap up only, right? Now we have officially closed above 24,000, and the official close is 23,977. I think barely it is 24,000. We will analyze in the OI data that 24,000 is what kind of resistance, but yes, it is a good resistance. So we will mark this level 24,000. Tomorrow above 24,000, the first level which you will see is 24,300. Above 24,300 we have a gap till 24,450, means 24,500. These are the two levels for tomorrow upside, and I do not see anything above than this tomorrow. It is roughly 500 points. I think it is 2 to 3% more than this move. I don't expect that it will come tomorrow. Shorts will only and only come below 23,800. If at all we breach 23,800 and we sustain on 15 or 30 minutes basis, I think we can go till 23,500. That's the only strategy for tomorrow. At 23,500 we can take a good support. Technically, from my perspective, this gap till 23,130 should be recovered, should be retraced, but it's not that easy. Seeing the sentiment, right? Because the sentiment is positive, unless and until something bad again comes from Middle East, I don't think this gap is gonna be filled completely. Partially it can get filled, that I can say, right? From weekly analysis perspective, it's a already very big candlestick, and we have already retraced 1, 2, 3, almost 4 weeks in one single day. right? So that's what happens in event based gap up or gap downs, right? And generally if you see this much gap up, even though we saw a gap up here, trade deal gap up, but slowly and steadily we retraced. But the day we saw gap up, it was a red candlestick and we saw a massive sell from the top, but it didn't happen today, right? So it will be, I think today evening it will be very crucial to see the FIDI data. If FIs have actually bought the market, then I think it's a very very good sign for the market, right? Now let's go to early time frame and discuss. Now tomorrow, if at all we are opening flat, wait for any closing above 24,000. The moment we close any early candlestick, or even it's the first one, first early candle closing of 24,000, try to slowly go long. Don't put all your positions into the trade mode at once. Slowly and steadily go long, as and when you get your conviction gets increased, then and only go long, right? So today we were tightly coupled in a range 23,830. No trading range will be 23,800 till 24,000. This 200 point range do not trade, right? Above 24,000, the first level which you will see, because this is a clear cut move above 24,000. So if we sustain above 24,000, if at all tomorrow after flat opening we sustain like this, aim for this level. Getting my point? If at all we open a very big gap up, then again the opportunity will go from your hands and again we can see a sideways momentum. But tomorrow's Sensex expiry, we'll also discuss Sensex premiums, that are they less or are they more. If at all we open a very big gap down, then I think markets will be in definite confusion. And if at all we open gap down and breach 23,800, then first level we can see is 23,500. If at all we breach, technically from my perspective, we'll see the OI data that whether 23,500 has become a very good support or not. But if 23,500 gets breached down, I think we might have a probability to retrace this whole gap up. Getting my point, traders? So today it is a good thing that post the gap up, we have encapsulated, we have remained in a range which gives us a good trading opportunity for tomorrow, provided the condition is we should not open with a gap. The moment gap up or gap down happens, it literally destroys the intraday trading strategy, right? So the upper levels I have discussed, that above 24,000 you can target 24,300, because there is literally no resistance till 24,300. 24,300 itself is a resistance, so till 24,300 you can trade. Below 23,500 or below 23,800 you can trade till 23,500. That's it. Getting my point? Bank Nifty, today Bank Nifty has exceptionally done good. If you see, Nifty is up 3.7%, but Bank Nifty is up 5.6%, right? So if you guys remember, at the bottom of this point we mentioned that a W pattern can form, but I didn't expect that Bank Nifty will open such a huge gap up. So I think there is no resistance for Bank Nifty till I think 57,000 as of now. 57,000 will be a good resistance, and from weekly analysis perspective we have already discussed, and in Nifty also we discussed on early time frame, if you guys remember, that markets have touched early 100 EMA, so the next obvious target will be early 200 EMA. And this also we discussed on daily time frame, that we are seeing a close above 5 DMA. Above 5 DMA, if a close happens and 2 consecutive close happens above 5 DMA, we went straight till 50 DMA. Straight. Getting my point? So now the next crucial resistance will be 24,300, 24,000, because it is 50 DMA. So tomorrow it will be very crucial that do we cross 50 DMA or not? But I think from my perspective, a good decent 2000 point rally has happened, and if the markets want to truly bottom out, markets should do a price action like this. Getting my point? So I think from my perspective, markets can once again give you a retrace back, although these retrace backs have come a lot many times. But a small retracement like this, then it will be a good healthy rise, right? So if the markets are coming back down, let it come. Then we can go long around roughly around 23,500 or 23,200. Getting my point? Same goes for Bank Nifty. Tomorrow above, I think 55, 800, 900, you can target. Literally, you can target 57,000. Another 1200 point move in Bank Nifty. Shorts will only and only come below 54, 800. That's it. Below 5400 only you can see some short, and if that happens, I think gap covering will start to happen. Total open interest, the change in OI today is addition of almost double number of longs and shorts. Major support which has got added today is at 23,900 and 24,000. Total open interest, if you see till I think last weekly analysis video, we saw that yes, 23,500 has a good resistance, and morning also we discussed that if we are gapping up above 23,000, I think you can see there is a massive unwinding at 23,500. If you guys don't agree, here, see here, change in OI, slightly more number of longs have got added than shorts, giving us a slight bullish bias. Biggest change in support is at 23,000 and major resistance is at 23,500. We will be opening above this resistance, so high chances that this resistance will become the support. And what has happened? The biggest support which has got formed is at 23,500. And now 23,900 and 23 in total open interest, 24,000 is the last big resistance. Our 24,000, the first level which we will see is 24,200, 300 and 500. 24,500 has massive resistance, guys. Getting my point? For Bank Nifty, change in OI is I think heavily bullish, with 55,000 being a very good support. So people have actually gone very near to at the money, right? Even 55,500 has is a very good support, right? So I think data is also bullish, but Bank Nifty data is very heavily bullish, more than Nifty, because IT today, okay, IT is also up, strange, right? So yeah, overall markets, I think markets are good, markets are bullish, but this 800 points gap up makes the market on shorter time frame slightly overbought, right? So there is a slight probability that we might do a slight retracement to the to the downside till 23,500. I think that should be apt. 23,500 should be a very apt point to go long on a, I think, swing basis. Positional basis, if you guys remember, in the weekly analysis video, will only and only come above 25,000. Above 25,000, aim for 27,000, 28,000. That's it. Getting my point? So for tomorrow, I think keep a bullish stance, keep a buy and dip stance, unless we break 23,800 and 23,500. Right? It will be very crucial to see that what the global markets do tonight, whether there comes any taco of taco. By taco of taco, I mean is there is a very famous term in the US, Trump always chickens out. That whatever he implements, he always takes a step back from that decision. So if he takes a step back from the ceasefire, then again I think we might see a 300-400 point gap down in the markets tomorrow. I just hope that it does not happen, but seeing the current situation, anything is possible, right? So the only way to deal with these markets is keep your position sizing less, Be protected on both sides. Keep hedging your trades, and don't be an over trader. That's all I can say. Be safe in the market. Cheers, traders. Good evening.